This is Short Hammer. It is the 10th of January, 2021, and this is Trading Zones. The just this year has just been insane already, just nonstop rips. So let's take a peek at the MES, and what we see is all-time highs. The market just continues to break higher, and you know, one of the things you have to be careful of as a trader is saying something can't go higher. That's an absolute lie. And if you want to take some serious heat, try to guess the top. Many a trader have has had to go back to work, just trying to guess tops. There is no the top of anything is infinity. You never know how far it can go. Can you use Bollinger Bands? Can you use pivots? Can you use standard deviation? Yes, right? To say that, hey, this thing is extended beyond a range where it should not be able to hold this breakout or this structure without pulling back. That might be true, but what you have to remember is time horizon, right? And the market can can stay just, I'll say, illogical longer than we can stay solvent. So if you thought this was the top and it wasn't, or if you thought that was the top, or if you thought this was the top, or if you thought this was the top, or if you thought this was the top, or was this the top, or was this the top, there were pullbacks, right? So it just depends on your time horizon to say, hey, when am I right? So all these things may be the tops, and you may be able to trade all of these and make your money on pullbacks, right? But the best thing that you can do is wait for structure, whether you're using EMAs, whether you're using Bollinger Bands, standard deviations, wait for pullbacks, or if you're playing breakouts, it's up to you. But to look at your time horizon and be careful not to try to guess the top. That's that's the entire point. Just be you can't really guess the bottoms, you can't guess the tops. You can play retracements, but just be careful because a few of my buddies right now are getting their backside handed to them by thinking they knew where the top was. So you got to really be careful. So looking at the MES, we are you know up above those 3700s that for quite some time were like almost a magnetic area, right? And we're just squeezing. So to the upside, we've got infinity. We'll see how far we go, right? To the downside, we could watch the 3817s. These are, you know, just fresh lines, right? So we had to see if any of these things hold, 3722, 3747, 3700, 3714, 3691, 3667, 3652, right? So we have to see if any of these areas hold on pullbacks, meaning on the lower time frame, you watch to see if the buyers step in. And if you see buyers are stepping in, and sellers are moving out of the way as price begins to rise, bingo, right? You now have a level where you can ride it up and see how far we can go to the next level. Usually you get in more than one contract. So you could begin to scale out on that pushback up, right? But you don't just jump in because it touches the level. You wait on the lower time frame to see a signal, something that will show you that price at that point, the buyers and the sellers agree, and they agree that price should move higher, or in this case that price should move lower, right? That was the agreement of the buyers and the sellers, right? That price should move lower. That these areas, you see these pullbacks, so you wait for the buyers and sellers to agree. So if this pulls back into an area, right, a previous supply demand area, whether it be a temporary previous supply demand area or more semi-permanent supply demand area. I'm calling it a demand pocket or supply pocket. You wait for the buyers and sellers to tell you that they agree. And once they agree, price will begin to move in one direction or the other, and it will no longer go sideways. So that's when you don't have chop, when you have a trend, right? That means the buyers and sellers agree. So just my perspective. So what am I watching for this upcoming week on the MES? Well, we've got earnings. We've got the earnings for financials, banks, and so that could be interesting, right? And so quite a few people think like, hey, because one party is in or one party is out, that the economy is going to crash. No, there is just a rotation into different stocks. The market never stops. Whether it's whoever, we could have Bill Gates become the president. It doesn't matter. It doesn't mean that only Microsoft will rise, right? So with the change, right, for banks, what's that mean for banks? Oh, more regulations, yes, but also inflation's about to rise. Interest rates might rise, right? Banks make their money coming and going, doesn't matter. So you really have to be careful trying to guess. Now, should this pull back? Should there be a pullback? Yes. Why? Because we've been running for years. The market has been running for years. The economy has been running for years. It's just cyclical. It should pull back. A pullback is coming. When is it coming? No one knows. But a pullback should come. So we'll see. If we continue to rise here, play the trend, play the pullbacks on your intraday lower time frame charts, right? Look for your setups and your structures. Look for bull flags. You look for those things, the breakouts, triangles, look for the breakouts, right? And look for the runs, right? And if you're using pivots, look for the runs, right? Like for me, when things are at these levels, I'm using, power of pivots. That's helping me being able to find my levels to see where things are going. So, I called off a few soft levels up here. And my point is be careful, right? Because right now we are stretching. How far can we go? We don't know, but we are stretching. Be careful, because one of the things you don't want to do is to look at certain sectors, and certain sectors, and I apologize because I know it's a lot, but certain sectors may seem to be overextended while other sectors are not. So what you want to look for sectors that are beaten down that may benefit under a Biden Kamala Harris presidency. What are those sectors? What sectors, usually at the beginning of the year, do investors and institutions tend to rotate out of? And what sectors do they tend to rotate into? Right. So the expectation is that usually heading into earnings, the big boys run. Tech will run. All these different tickers, our favorites, our blue chippers will run headed into earnings. But quite a few of them have been running already. Not Amazon. So I mean, just quite a few have not really been running the way that they should. Like they're up, but they're not necessarily running. Nvidia hasn't been running. So I guess we have to see how this shakes out. But just keep an eye on your setups and be careful to not go too heavy unless you're sure, right? Because there's a lot of political wind swirling. There's a lot going on right now. And can the market continue to rise and run another 100 points, 200 points, 300 points? Yes. Can the market pull back 100 points, 200 points? Yes. All about time horizons. Be careful. Watch the charts, figure out the market sentiment on a weekly basis. It can change week to week, day to day, but on a weekly basis. Right now the market sentiment is strong, right? Everyone's bullish. So for me, I'm looking for more long plays than short plays overall, though I do have short positions on just based on a specific industry or sector. And take a peek at the sectors that people usually use when they're unsure, when they're afraid. Sectors they use to hedge. Look at those sectors, right? Just look at those sectors, and whether it's real estate, etc., whatever those sectors are, look at those sectors and see if you see buying. See what you see what the market will tell you. People will tell you if they feel that there is risk imminent. There's volatility imminent. So you can see that by going. I'm not going to get. And let's go to. Apologize for this soliloquy. So this is the Russ, still squeezing, still going. Financials, Goldman Sachs ripped. So just strong, small caps. Take a peek around. Just soft levels 2111, 2081, 2057 to the downside 2019, 2008, 1990, 1962. Can we go higher? We'll see. But notice the difference in the charts, right? And you can sort of get into it and go take a peek into some of the different measuring tools, right? If you go check out Thinkorswim, you can see, out of all the, I think it's like 2,000 tickers in the Russell. I could be wrong. Which ones were positive? Which ones were negative? Who's making all-time highs? Who's not quite there yet? You can go sort of take a look and break down your industries and sort of see what's going on, right? And the difference between this and the S&P's all-time highs, closed strong, all-time highs. This is still strong, but it's not all-time highs, right? It didn't close breaking out, right? So we'll see what the Russ does next week, where you have the earnings for banks coming out, right? It's earnings season, so things could really get a little bit haywire. So just keep an eye on this. So first up, we have Amazon. Let me move this up. Get these candles nice and big. I want you to take a look at this. So what have we been saying about Amazon? Above the 3220s, more bullish than not. But what we have to see is multiple days above that level, increasing volume, increasing strength. If we pull back within the channel, be careful, right? So what's the rule of a channel? If it pulls back inside of a channel, there's a possibility that it can retrace down to the bottom of the channel, right? The channel is a challenge. If the buyers are so confident, then we should be holding above the top of this channel, above the 3220s, and we should just be consistently making higher highs. What we should not be doing is retracing back inside of the channel. So this push out of the channel, pull back into the bottom. This push out of the channel, we pull back in, caught a bid here, push back through the top, hit our heads, retraced. Now, any of these lines, if you've been watching our videos, are not new lines. What's going on with Amazon? Well, why won't this thing go? Right? Why are we pulling back inside of a channel? What the heck is going on with Amazon? Who knows, right? They did exit that healthcare initiative that I think it's called Haven. It was Amazon, JP Morgan, and off the top of my head, I do not remember the other company. It might have been Microsoft. I'm not 100% sure. But they dissolved that. They're doing something a little bit different, which is, I believe, becoming a one-stop shop or portal for healthcare patients. So they'll be working with healthcare companies, I believe. So that's going to be interesting for them. They're usually a data first, decision second type of company. So it looks like they'll be collecting data for a few years, and that may be why they exited that venture, right? So we'll see how that works out. But Amazon has earnings coming. Quite a few people are still working from home, and will they see that benefit from their Amazon Web Services? Will they see the benefit from Whole Foods? Will they see the benefit from Also, people purchasing products online. People are still home. People just receive their stimulus checks, and those stimulus checks usually get spent on wants, not needs. So we'll see. So with earnings, less than 30 days out, Amazon may rise. We are within a channel. We'll see which way this goes. Chances are their earnings probably aren't down. I mean, we have to see. The sad thing about and I apologize for being just just talking a bit about these technicals. The sad thing about the state of the economy is that blue collar workers have really been struggling. You know, Meanwhile, white collar workers, those people that are able to work online, able to telecommute, a lot of those people, their lives are still going on. They're still purchasing products. Luxury goods are flying off of shelves. Mid to high end goods are flying off of shelves. If you look what people are buying, Lulu is like, just look at Lulu. Look at all the different brands that upper middle class to upper class, like just different. However you look at, you know, that construct. People are still purchasing things. So it's interesting how this pandemic just affects different people in just many different ways. So when you make your thesis, just remember that some people are doing fine from a financial standpoint during the pandemic. Meanwhile, others are barely keeping their head above water. So it's a lot to look at and to think about with Amazon, and just the market overall. But for me, just looking at the levels, we pulled down around 31.42. Buyer stepped in. Look at our previous charts. This is a line that we had. Buyers pushed it back up. We're below 31.93. If we regain that line, we need to be bullish through 32.20s. Above 32.20s, then we need to really go on I'd say, a nice grind through the 32.68s, 33.44, 33.70s, 33.86s, then 34.40, 34.33s. Is that going to happen? We will see. Let price dictate, right? See how this works on a day-to-day basis. That's how I'm looking at it. I'm not in any multi-day Amazon swings. We'll see what we do each day. And I actually haven't been that heavily into Amazon. Um, I'm definitely interested when, depending on how the week sets up, in um, doing a little bit of selling just outside of the range of where I think it can go. But those are things that really I have to wait for the setup. But I prefer that if this was, bullish or bearish in a direction and trending, it's easier for those strategies to pay off, right? So we're right in between this 31.42, 31.93. We're going to break one way or the other, but then the 32.20 and the 30.80s is that's the channel that we're watching, right? So we haven't really been bearish beneath this line in well over a month, and we haven't been bullish above this line, 32.20s. So we'll see how that continues to play out, and what the market tells us as far as Amazon, right? Are people rotating out of tech and into other things that they feel maybe about to take off? We'll see. But for me, I think Amazon it's just been a nothing burger as far as consistent trending movement, which Amazon is known to do, right? We have these ranges, but if you were to go back to the beginning of November and someone asked you, where do you think Amazon would be as far as price? You wouldn't say within 50 points of where it was at the beginning of November, right? November 11th, you go to that date, we're at around 31.42, 31.43. If you were to bet money, you would not guess that Amazon on January 10th would be within 50 points of, or 40 points, I would say, of that price. So just be careful. This is interesting. Amazon has yet to declare direction. So we shall see still if this, breaks out of this channel, and we would need strength and a push through 33.44 trending. We'll see. I mean, it can go either way. Just be careful. So here is Netflix, and with Netflix, what has been our thesis? Um, Below the 470s, look for a long setup and expect it to retrace. Above the 550s, look for a short setup. Why? Previous structures. This is our 4-hour chart. Previous structures above the 550s. The oxygen has gotten thin. We've retraced each time, right? Multiple days above this. Nope, doesn't happen, right? And so here, um, this retraced for different reasons. You never know at a specific time. Vaccines coming out, and more people being inoculated. So this didn't quite make 550s. Well, can it still make 550s? That is possible. Earnings coming up pretty soon. Um, but it being below this trend line to me is interesting, right? We watched it ride this trend line all the way up, and this trend line has been support. Will this trend line now become resistance? Will this become a supply area where each time we touch, we pull back and we sell? We will see. Um, for me, right? This is tech. We're headed into earnings. So if you're playing the options, volatility and the underlying should move up as we move towards earnings. That's what's supposed to happen. We'll see, right? And so from this level, we know that above the 493 area, when we start to drop down into these 490s, it can be interesting, right? That's why we have this line going across right here above this 490. This, what's this, 490? Yeah, 493 ish, right in that area. It's interesting, right? But for me, what I'm going to be watching is that we're below this trend, and we'll watch what price does, and if we're able to ride this back up. But these are the levels for Netflix we've discussed in previous videos. Watch out for the 529s, 535s, 542s. Above 535, our expectation was 542. When you pull back below 535, watch out for 529. And then once you start to fall into this area, it really gets interesting as far as where do you look for the buyers to step in, right? 512s, 513s have been an area. Look at the area where we struggled to get back above once we dipped right in here. Look at that. Isn't that funny? And so we're a little bit above the 507, 504 area, which is also an area. So let's see if what we get is a buy back up through the 513s, or if we get a rejection and we pull back down below the 504s, which opens up the upper 490s, right? That's an area, but the 493s. And if we fall below 493s, watch the 490s, the 485s, and the 475s. So we do want to be careful here and watch to see what the market is telling us. And Netflix, and I've mentioned this in previous videos, I mentioned it really briefly. Remember that since people have been at home since the pandemic, this thing has rocketed as far as new subscribers. How many new subscribers can be available for Netflix? I mean, people have been home. So do they have, much more room to expand as far as subscribers? So they did increase price, but that was quite a bit ago. So we don't know if the increase in price can I'll say balance out maybe the inability, we are not sure, the inability to acquire new subs, new customers. So we have to see how this is working for Netflix headed into earnings. We're still home. Vaccine is coming. How will people view that? So I've mentioned this in previous videos. Not going to, harp on that too much, but just interesting when it comes to Netflix. NVIDIA. NVIDIA, same. NVIDIA just did a deal, I believe, with NIO as far as partnering with them to uh, produce an electric vehicle of some sort. So we'll see. Chips are definitely very important when it comes to electric vehicles. And for NVIDIA, what do we watch? So if we call out these levels, right here, we have our 536, which is an important line we have on NVIDIA. And above that, we have the 546, right? So above five, and I'm going to extend this some more because I think that these areas to me are still valid, these lines. Above a break above 546, look for bullish squeeze. That's what I have. If it gets above 546, I'm looking for buyers to go nuts. And if that's the case, then we watch out for 555. We watch out for right in this area, this 565, and we see if we could reach the 589s, maybe higher, right? Maybe higher. We have to see. We'll see how high we can go if that happens. If we stay below the 536, um, 531s, 514s, 475s are down here, but you do want to watch this hitch here, which I'll probably end up making a level at right around that 504, 505-ish area. This is interesting, right? A place that price has reversed previously. So that's what I'll be watching for NVIDIA. See if there's a reaction to their new partnership with NIO. They do have earnings coming. So just keep an eye on NVIDIA. Remember those levels I just mentioned. They're very interesting. For me, they're going to carry over into this upcoming week. And we want to see the reaction to those levels, what the buyers and sellers think. That's what we want to see. Facebook has been a little bit weaker. And so if you were to draw a trend line from here on Facebook, it's popped through, but it's still trending down. So for me, these are the lines that I have on Facebook. We have a line right here around 267. Previously, whenever it's interacted with that 267 area, uh, buyers would step in, right? And we would get a push back up. When the buyers have not stepped in, price has drifted lower. 264, I believe, previously was it may have been a monthly area, like a monthly pivot, or was it a quarterly pivot? I can't quite remember. But either way, um, what do you want to watch for? Watch to see if buyers can get us back above this 267 area and give us a squeeze back into the 272s. And that's a segment, right? Right around the 272s. And then you need us to get above these 277s and then a run through the 279s and then watch out up here around the 280 50s, right? Both times I just reached up there. If you, I know this line is here, but it's previous levels where this price is rejected. And above 279, we're more bullish than not, but that means that we're more bullish looking for bullish candle structure and bullish strength, increase in volume, increase in price, consistent grind, looking for trends and candle structure, and just other structures that we look for, whether it's triangles, whatever, and breaks up above that and a squeeze. That's what we watch for. And whatever you use, whether whatever oscillators you may use, whether that's stochastics, whatever you're using there, if you're using EMAs, if you're using um, VWAP, if you're using Bollinger Band, standard deviation, you look for these candle structure and whatever you're looking to fire, right? To give you that boom, this is fired off bullish on this time frame. Whatever you're looking for, you you like I'll watch those things at these levels. That's what these lines, these supply demand lines mean to me, right? This 291, this 297, this 279, the 264, the 261, the 254. At those lines, I mean, I look at those areas, I look for confirmation, whether be it through candle structure, through volume, whether it's standard deviation, whether it's Bollinger Bands, whether it's pivots, whether it's EMAs. I look for correlations and I look for the market to tell me that this level is still valid. And I look for the buyers and the sellers to agree. And when the buyers and sellers agree, I move into that wave and I follow it until you begin to see you get to a level where the buyers and sellers may disagree and you look to see if they're still in agreement. When that agreement goes away, as far as the buyers and sellers agree, for example, here, we got down here, buyers and sellers agree that we should move up. We did. We got here, buyers and sellers agree that we should move down. We did. Back here again, they're still in agreement. Back down. Back here, still in agreement. Back up. Pull back, pull back, back here. Oh, we used to agree, that this 279 area that we would hold, we no longer agree. Look at this break. Believe what the market is telling you. On the intraday, you see the structures and the setups that lets you know back in this area. Hey, this was a previous area, and we still agree that this is a good area. And so we'll hold price above, back up, back down. We no longer agree that this is an area where we should buy. And, sellers don't agree this is the area that they should sell. And so it continues to go down, right? And then now this becomes an area back test down to this area, right? And buy, back up, back. So you can just look at a chart and find these levels and look for the areas, the supply demand areas, and then you don't just get in because that's a supply demand area on the lower time frame. And also depends on your time horizon. If your time horizon is different, maybe you do, right? Because you're waiting for whether it's a weekly or bi-weekly or monthly swing. You're waiting for that reaction from point to point. That's one way to play it. Sometimes I play it that way. The other way to play it is an intraday setup where you're using the lower time frame and different lower time frame triggers at those levels to move with the market. Let me keep it moving. Trying not to take too long. But just around Facebook, just remember there's a lot going on, and there's a lot of politics going on right now with a lot of these tech platforms and the current administration. So just be careful with any social media platforms, because there's just a lot of politics around those right now. And so we don't know if there will be just a reaction to some of the stances that they have taken. We'll see. So just keep your eye out to see if there's a reaction, because it's right now there's a lot of politics swirling, a lot of emotion swirling, and different tickers may be affected as far as price based on that. Microsoft. So, and also, what was it with Facebook? I believe that the iPhone, Apple is launching something that's going to make it more difficult for Facebook to track you and also to advertise to you on your iPhone. So that would be a direct impact to the ability, of Facebook to make money from ad dollars. So if you just take the iPhone users and just that demographic of iPhone users, right? And their purchasing power, and now it's more difficult for you to market to those people. That should affect your advertising dollars, and and how much money is coming through, how many ads are being clicked, how many ads are being how much inventory is being purchased by advertisers. That might be interesting. So you may want to take a peek at that. Just security futures that may impact uh, social media or advertising, right, on Apple. So that could be interesting, something to look for, and just to keep an eye on. Microsoft, we did mention above the 217 is the rise, right? But what do we mention when it gets up here around the 221s, 225s? Be careful, right? The extension up here, max the 227s, 229s, and then we see the retrace. The air is thin, right? We don't spend too much time up here. We get these strong pullbacks. Look at that push, pullback. So expectation, pullback is what we've seen here. So what happened though, the buyers did step in and push us back above this 217s. Maybe they're trying to catch this elevator rise again and get this push through. We'll see. But for me, I'm waiting to see below the 221s. I want to see how strong the buyers are above this 217 area. And if they're strong enough to push us above 221s, I might get long against this line or sell a little bit below this line just on a temp intraday basis, right? But I'm going to wait for my triggers on my lower time frame. But up against this 221.70s, I might get short first. You know, on the first touch of that, first push into that, depending on what the market sentiment is on that particular day, I may look for a short into from this area, and have a stop maybe a little bit above this, just based on structure and market sentiment and how we're moving. And if I see a rejection here, right, then I might do a follow on the lower low setup back down into this area, right, back into these 217s. And if we drop below the 217s, I might also get short against this area to the downside, right? If we pull back in here and the buyers step in, I might get long against this 217.70 area. So it wouldn't just be the 217.70, it would be that zone. And whatever tools I'm using, when it interacts with that zone, then I may have maybe a $1 stop, or whatever my structure may be when I get in, whatever the plan for the trade is when I get in. I'll have my exit, or my profit take, or as far as scaling out. If I'm in 5 contracts, if I'm in 10 contracts, maybe I just get 1 contract. It just depends on my confidence in the play. And maybe my average is a little bit lower, and I may either average one for a pullback and a continued downside, or it just depends, right? So there are different tools and different ways we can play things, and just keep an eye on this, right? Usually for me, when I'm trading Microsoft, when I'm trading Apple, when I'm trading Amazon, any of these tech stocks, I'm concurrently watching the cues, and I'm watching what the cues are doing at specific levels to see if the cues are continuing to show strength or continuing to show weakness based on the play that I'm in. So that's something to watch for. If you're in a tech stock, keep an eye on the cues. See what the cues are doing. Like, what index is the ticker that you're trading in, and that's very important to watch. Um, as you're taking your plays, you will notice there are a few things that I've noticed. I'll get into that. I'm not getting into that. Just leave that alone. So watch Microsoft, and it, just like most of these tech stocks, has not really been just trending strongly for a long period of time. Most of them have not. The market has been rising um, with financials, and we'll get to that later. So let me keep moving. My fault. Uh, too excited, talking too much, and so just the watch list, right? So this is a trend line, and yes, we did buy when this pierced, and the the exit as far as stop out would be, or would have been, bearish below this 127.40s. Did not happen. So we got a nice little rise out of here, and you run. You take that, right in. You get up into this area, you run for it, right, and pull back through. You don't immediately buy. You never immediately buy on the trend when it's this tight, because what you want to see is continue to rise through these levels and a higher high, right? When you don't see that, and I need to sort of extend this way, create a triangle here, but when you don't see that, right? When you don't see this continue, for example, real quick, I apologize. Um, long, long day playing with the kids. So, okay. So when you see this pullback here, right? So this isn't the trend yet, right? You can draw it down here if you want to. I wouldn't draw that trend. It's not a trend that I would follow. Just based on just me, I wouldn't do that. But then this pullback here, look at this rise. You see this rise. So now you may have this trend line drawn. When this pulls back into this area, right? We have a a line here, a horizontal line here. We have a diagonal here, right? And so when this drops into trend, and and it also interacts with this line, and you have to look for your intraday entry. Look at this rise. Look at that rise. So any pullback into this, I want to see buying. I don't want to see a pullback through. Where else on this uptrend, right? This multi-week uptrend, have you seen price spend any significant time hugging or pushing below trend? But trend is still up, right? So on this pullback through, yes, 27.45. Do you get long? Yes. Yes, you do. And you wait to see if price stays below this. If price was to pierce 124.72, run for it. I'll be out. But this is an area also where buyers may step in, and you ride it back up and you get the heck out, right? I'm not going to be holding, expecting this thing to break this top here. I'm going level to level, riding this trend. And so once this trend breaks, so for me, how I would play this, right? Then if this drops and sells back to 127.45, I'm not buying again. Why? The first touch, the first interaction, yes, I'll get it based on that. But now, if we come back down through this trend, this uptrend that I have here, and we go back to 127.45, now for me to get long on the intraday, I watch for the buyers to step in and give me a rise here. And I'll use this previous low here as an area to watch to see if we sell through that. If we sell through that, then my mentality totally changes, and I'm no longer going to be dip buying. I'm going to be looking for opportunities to fade this, but only intraday. It's Apple in a whole bunch of funds. Got to be careful. So I'll be looking for opportunities to fade this intraday. So that's what I'm watching for here. We'll see if the buyers are able to hold us above the 131.70s, and if we continue to ride this trend to the upside. Earnings are on the way, so we'll see how this plays out. But for me, that's the way that when you see these lines and these trends, that's how I play it. Like on the intraday, I wait for the setup, wait for the fire off, and I'm in, right? And I let it play out, and I'll swing and see how it plays out, because I do believe that I did believe that on this drop into this trend, and I mentioned this last week. Check the video, that we would see a reaction from the market, and we did see a reaction from the market, right? But my thought process wasn't that the reaction from the market would be we would rip. There's still a little bit of caution, a little bit of uncertainty going on right now, so just be careful. The market's at all-time highs, but Apple isn't, Amazon isn't, Microsoft isn't, Facebook isn't, the NVDA isn't. Just the monsters of tech, right? They are not at all-time highs. So just interesting, right? So if they begin to run, we've got room. You never know, right? So just earnings are coming up for the monsters of tech. So just keep your eyes open. There's a lot of interesting things going on right now. Over to Intel, and Intel is uptrending, and old news dip. Watch for buyers to step in. They did. Elevator, or you can say stair step back up, and on this pullback here, watch, see what happens at the 51.11s if the buyers step in and pushes us back. So look, you automatically know that back at this top here where we had a reaction last time, and you can look at the bottoms here, that price may react here, and that at this point, when we push up into that point, you may want to think that the buyers and sellers may think that that may be an area where price may reverse. Look across here and here, and right, this is an area, right? And should I have a line in this area somewhere? Yeah, I should. But just remember, that's an area to watch out for. So now what you watch for is, and I'll put a line there. I'll make a note to put a line there. What you want to watch out for now is, you want it to be bullish above here, this 52.50s. You want to be bullish above this area, and a push into 53.58s, right? So watch for that. See if that happens. Right now, we're pulling back from that area. So you want to see if the buyers step in at 51.11. If they do not, and we drift below this, Then you keep your eye open for the 49.16s, the 47.27s, maybe the 45.40s. We have to see how far this goes. If you sort of zoom out on this and um, just look at the drops that we've had on earnings, right? Look at the last two earnings, drop and drop. So if you're brave, you may be, interested in playing these earnings. Me, I am not, unless I find or get Elisa to put together a complex option strategy for me where I just can't lose. May do that, but this may drop again. We don't know what their earnings will be, so just be careful and keep a note and look at the previous reactions to earnings, and don't get caught with your pants down. Watch your six. So these are some of the levels here for Intel. You can mark these down if you're so inclined. But as far as Intel, um, I'm kind of not heavily, jumping into and out of this on the intraday just because of the movements. There are other things that give me, a better return, and I don't really have to watch them. So we'll see how this plays out. But keep making note of the levels that I mentioned and what to watch for, and I will keep it moving. And even look at this, right, all the way across. Look at this hitch and this next drop. It's interesting, right? Isn't this interesting? These lines have been here way before these moves. That's why whenever I see, that's why I love these supply demand lines, man. They the gift that keeps giving. All right, let's keep it moving. Um, CMG and CMG being CMG, right? And wow, that's interesting. Did we pull back to this level around 13.11s, 13.12s that we were waiting to break above and be bullish above? Yes, we did. What did we do when we touched that level? Buyers and sellers said, this is an area that we have had, challenges holding over and challenges holding under. We've seen rejections from this area. They stepped in. Look at the previous videos. These lines have been here, not new. And when it gets there, it doesn't mean you buy. It means you watch for a reaction. And whatever you're using intraday, that's what you do, right? Period. That's what you do. Whatever you use intraday, however you play it, whether you're selling things, whether you're buying things, that's what you do. And and when I say selling things or buying things, it's you could easily, when it gets here, you could say, hey, I'll sell some stuff below this 1296 or below this 1270 with once you see the reaction with the expectation that if this continues below, I'll be out. And so that's based on your time frame, right? It could be weekly, you never know. And especially when things are volatile down, it's really interesting. That's why these levels are so beautiful. But we did buy back up through the 1348s, 1394s. Will we paint through the 1421s? We have to see. Will we make higher highs? We'll have to see. Earnings are coming beginning of February. So keep your eye open, usually on earnings. CMG is a big mover, maybe 50, $75, if not more. For me, I love to play these earning runs, but I will not be playing at these levels. So this needs to significantly pull back for me to even consider playing the earnings on this. And what's funny is this sell-off could have been the dip, the pre-earnings dip, and this may be the run that is on, and price may rise. So we have to see if price rises above 1421s and through the 1430s and continues to go. This was our pre-earnings dip. And so yeah, the cows may be out of the barn. We have to see how this plays out. But these are the levels and lines on CMG. Can it go higher? Obviously, it can. But just keep an eye on this to see if we pull back below the 1394s and if we get a drop from this level down into the 1348s, or if we continue to sort of hover around if they buy us back up. So CMG is interesting, right? Something to watch. Um, I may look for a play on this, but I would rather wait to see if we hold the 1394s And if the buyers could pop these 1421s and give us a higher high, I'd rather wait for that. If we make a higher high, um, for me, mm, cause CMG is so volatile, man. You gotta be. This thing could reach you anywhere, so it's like you gotta really watch it. I might stay away from this until earnings, but I'll be watching it though, because if I see something intraday set up that's beautiful, I'll take it. Because this thing is spready as what. Um, so you need to trade this in a wave. You don't trade this like to jump in and then because, and I'm gonna be incredibly quick. CMG will um go nowhere for the entire day, like for 4 hours, go nowhere, and then it'll have like a 14-point move on you, right? So if you're on the right side of that, that thing will go. So the recommendation for me usually with CMG is that if you're going to trade it, remember that the repricing or the pricing of the options is weird, it's spready. So you want to make sure that you're with the trend. If you're against the trend, it's going to be hard. Just a tough road to hoe. Um, keep it moving. And remember, CMG. This is like a while ago. They'd mentioned this, and I mentioned this in the video that they were behind on their new restaurant rollouts because they had made a decision that all their future restaurants were going to have drive-throughs, right? They were sort of looking ahead, and this was pre-pandemic, right? That they began to think this way. And I believe that the CEO that they brought in that turned around this ship was from Yum Brands, and I think the gentleman used to run Taco Bell back in the day. Very smart guy, like stays ahead of the curve. Very smart guy. Um, okay, keep it moving. Not important right now. Got too much information swirling in my mind. Um, McDonald's, with the price reversed off the 209s. We found a buy through 213s. And what's funny is I actually played this a few times off the 211s. Really interesting. But it looked so strong that I just scalped it. I didn't get much, just like a dollar or so here or there, 50 cents here or there. It just was not strong. Like the play I was trying to make was not strong. So you had to be so careful. Um, and just, these 213s, beautiful. What we want to watch what happens to the 216s. Why? Prior price has reversed, right? So we want to see if we can buy through here and get bullish above. If we get bullish above this, then there is a potential. Look for a rise into the 219s, right? The lower 219s up into 1880s, to 1890s, or up into the 221s. We're also heading into earnings for McDonald's, and McDonald's has been going sideways. Look at this; it's hanging out in this area. If you've been playing right between 216.90s and 206s, so if every time it's pushed through the 216.90s, you said, hey, when it pushes up through here, I'm gonna be short, and you've been out a few weeks, you've got your money every single time, right? You just couldn't freak out on this. Me, I'd be out. I'm not gonna lie. I'm not holding on that. You break through my levels, I'm out. I'm not gonna average. I'm out, and I'll wait for this sell, and I would not be doing anything but waiting. And the intraday is different. I'm just saying, looking at this higher time frame on this buyback through, I'll be short again. So, um, you keep doing what works until it doesn't. Period. That's just how to play this game. And we're buying back up here. I want to see what price does around the 216.90s, right? Will I be watching for a short setup intraday? Yes. If price gets above 216.90, then we're bullish. I'll be looking for a push into the 218 upper 218.80s, or I mean the 218.80s, upper 218s, into the 219s. And at that point, I'll be watching to see what price does. I'll probably be exiting if I'm long. And if we push into 221s, then I'll be looking for another fade from that level or selling something above this level at a higher level, and we'll see. Right, that's what I'm looking for on McDonald's. With the levels, we have 209.40s, 213.40s, 216.90s, 221.06, 223, 226.75, and 231s. We'll see how this shakes out. Headed into earnings, breaking out from a good level. We'll see if we see strength and extension above these levels, and we'll see what the buyers are telling us. If you want to go to a place like BlackBox, stocks and check out sweeps, you can. You'll be able to see if people are getting into further dated strikes, expecting a move up heading into earnings. That's a good place to look. If you just want to look at the technical levels, if you're going to use whatever you're going to use, right, there is a possibility that this could be the earnings run beginning. We have to see, right? We just have to see. But we're coming off a level where we've spent a significant amount of time the last few months, and we want a significant separation from the 216 to 206 level, right? We want a significant separation, well, 209 level, I'll say. We want a significant separation, right? So if we've been in this area for all this time and really hanging in this area, the extension that we want to see is an extension up here through the 226s, if not higher. But we'll see what happens. Not saying this thing is about to rip and nonstop run. What I'm telling you is watch these different levels that we know I just mentioned, and watch what the buyers and sellers do at those levels. And whatever you use intraday for your entries and your exits, that's what you do. Whatever strategies, whatever you're doing, if you're selling, if you're buying, just watch those levels. They're very interesting. Next up is Goliath, and not Goliath National Bank. For those that watch How I Met Your Mother or used to watch How I Met Your Mother, just not Goliath National Bank, but Tesla. And Tesla has been Goliath. And whenever any of Elon's other ventures do well, whether it be it SpaceX, the Boring Company, any of Solar City, whenever any of those things do well, the sentiment in Tesla is up, right? And he's doing really well, and just he's in a really good place right now. Would I be in Tesla like long? Not unless you have a complex strategy that puts you at an advantage, right? Whether you're playing whatever option strategy you're using that would protect you and keep you safe, I would be careful. Volatile stock, but we do have our levels here, and shout out to Sophie. Shout out Sophie. You were spot on off those 568s. You're probably still long in this. You were spot on. You liked that level, and we've been buying, right? So we'll see. The next level I have is 937. These are some old lines, and we've just ran through these levels. It's been insane, been absolutely insane. But if you want to use these lines and these levels, I'll give you these nearby ones. We to the upside we have 937, 969, 994, then 1019. To the downside 857, 819, 784, 713, 651s. We are headed into earnings. Be careful. Be careful, right? This is up significantly. I personally would expect a strong pullback prior to earnings, and we'll see how that plays out. I'm not making any predictions, none whatsoever, but I personally would expect a strong pullback prior to earnings, and I may actually touch bases with Elisa for a strategy to play that for next to nothing. So we'll see. But I would expect a pullback, and we'll see if it happens. Maybe we expected a pullback here, right? I mean, not me, but people did. People expected a pullback at all these different levels, and all we've been doing is buying, right? So could we run through to 1,000? That's possible. Could we wake up and this thing be down around 784? That's also possible. Could we be down around 713? That's also possible, right? So what I would say is, if you're playing Tesla, play it intraday and make sure that your entry is safe, right? And you can play that with whatever tools that you're using on your intraday. Be safe. For me, I'm probably going to look for a setup where I can not spend much of anything, and maybe even get it for free, and be playing the downside. So we'll see, what strategies. I could touch base with Elisa what she come up with as far as an option strategy. But this thing, if I do play something, this thing could go to 1,000. I would not care, because I would be on something for probably about a month out, almost a month out. I would not care if this thing pushed another $100. I'd just be letting that thing sit and letting it work. And so we'll see how this plays out. But don't try to guess the top. That's just that is not the path to success, right? Wait for the market to tell you that, hey, we're not going higher. Wait for a lower high if you're trying to be on the short side, and then play that sentiment. Follow the sentiment, follow the trend. And if you have a strategy to be able to utilize that to your benefit, um, as far as selling premium or something like that, hey, that's that's the way to go. You have a lot more things working in your favor. ZM just took a beating. As far as ZM, we see that price is not advancing lower than this 346 area. Look here, remember that hitch. So what you want to watch for, though, for me, price has to advance above 375 before I would even consider getting long. And on that advancement, I'd only be playing this intraday on an intraday setup, right? And then I look for a rise into the 400s. But as far as ZM is concerned, for me, I'm staying away. The extension below here, beautiful, but I have to see what it does back here around the 375s. If it makes a lower low than this little hitch here around the 336s, then I might be watching for the 300 test, right? But as of right now, I'm just watching. And so to the upside, we have 375, 40s, 40130s, 434s, 460s. In between here, we have little intraday pop levels, right? Where you can look for different reactions, whether it's 405, 407, whether it's the 390s, 395s, different little levels in between here, right? That are really interesting. So for me, I'm staying away. Bullish above 360s, want to see 375 test. Bearish below this 330 to 330s, you want to see a 300 test. We'll see how that works out. But remember, what we mentioned in the last video, that you wanted to keep an eye on when it comes to ZM. With the rollout of vaccines, right, then there will be people headed back to work. That is the desire of the majority of people in America. I mean, in America, is that they want to go back to work. They want their children to go back to school. So, not sure. Two things, and I'll be really quick because this is we're almost done. But two things. One, because people are working from home, there are quite a few people that will never go back to work, because for their employers, they found it more beneficial financially to have those people work from home, right? That's one. Two, with the uncertainty of the pandemic and dealing with the coronavirus and the different strains and the vaccines, with the uncertainty, um not sure if people are just going to, investors maybe, but not sure if the users of Zoom, if that's going to go down, if people may not keep it just in case, right? So we'll see how that works out. Earnings are out in March, quite a bit away, have a lot of time. So we have to see if the market, remember, the market is forward looking. If the market is looking forward and saying at that time, quite a few people will have begun to receive the vaccine, and they will be back out into the economy. Less people will be, less companies and corporations and schools and school districts will be using Zoom. We'll see. So just keep your eye on that and see what happens around that. Facebook did launch a competitor. Have no idea how well that competitor may have done or may be doing, but just interesting. So CI and Cigna, I love Cigna. Cigna will, it's super spready, more spready than CMG. and the repricing sucks. If you're playing options on this thing, even if you're playing shares, the repricing sucks. Um, it's always spready, and if it's not spready, be careful because they're trying to probably, they're trying to bait you in. But you have to play this thing in waves, right? It's not a scalp in, scalp outer. You got to really be careful. It depends. If you're trying to make a quick, $50 or $100, maybe you can scalp in, scalp out. But if you really want to get the meat of the move, what you have to do with this is it's a sentiment play usually, right? So once um once Amazon and JP Morgan, I can't forget the other company, once they chose to close Haven, when they announced that they were launching that, CI dropped, right? All these healthcare tickers took a hit from that, right? And so now they announced that they're closing, and look at this. And so I was watching for a break on this thing, and I did mention watch the pullback into the 202s, and we got a slight pullback, but this thing just bought up and we had a nice run here. So what does that mean? Price rejected at 222.80. That paid us on Friday. Thank you. So what you want to do here, in my opinion, is this is a steep climb, super steep climb, right? And CI can go. Earnings are coming beginning of February. Usually after earnings, it makes a decision and it moves in a direction, and it will continue to move in that direction. So um, I would be careful with CI until the new administration announces their plans for healthcare, and then wait for the reaction to that decision, and then that direction is the way to go. So I'll scout this, and I said don't scout. It's not a scalper. I'll scout this, meaning that I'll be in this for 2 or 3 days and following the trend and into the lines, but the supply demand areas. But other than that, I'm going to be really careful. I'm not going to be in, 3 weeks out, 4 weeks out. I'm not in any monthly swings of this at all. So let me give you the lines: 222.80, above that 226.58, right? And to the downside, watch out for 215s, 206.90s, 202s, 190.80s. If you look back at previous videos, uh, none of these lines are new. These lines have been here and love playing them. Love using numerous strategies to play these. Just works great. Um, I'm a retracement trader. I love retracements. It's just my bread and butter. Um, so just to say, these lines, they do work, right? So look for your own intraday setups based on these. I'll wait for the reaction on price. And what's funny with CI is that usually I slightly jump the gun when I see a strong movement and I believe that price is going to reverse. So once I see this thing, because it'll just stay at a level and just play games. But once I see that it's not advancing further in a direction, I usually play the other direction early, because the repricing, you can just exit sometimes on the reprice. It's not too bad because it'll move $3 or $4 in the direction on and then the repricing will be beautiful for you. And if you're wrong, then you just you just take it. But CI I only play when I have the sentiment down and I like the technical movements. That's the only time I play this thing. It's not an intraday play for me. Usually I avoid it unless there's a reason, something that I see from a technical setup that I really, really like. Next up is GOOS, Canada GOOS. Um, so what you want to okay, so what we mentioned was below the 32, the 30/20s. Be short this, and I am no longer short. I did play it, worked out well. But I didn't get. What's funny is I played this thing multiple times. One of the times I did get stopped out. I'm not gonna lie, because I was not trying to manage this at all. So what you want to watch for above the 30/20, see if the buyers step in, right? If the buyers step in, it may give us a rise in the 32/30s, then into 33/70s, 35/65. If we don't see that rise, just keep an eye on any pullbacks in here. and not sure if price is going to go lower. I didn't want the 26s. That just there's no selling pressure for that, right? That's just not going to happen. So just keep an eye on this, or it didn't happen. If we make lower lows here, I don't know. I don't see it. Just the appetite for lower just wasn't there, right? To make it to this lower line. And this is one of those tickers that it moves very slowly at times, but it's methodical, and it will give you a chance to get out. It's not really that spready at all, but just the movements. Sometimes it's like almost watching two snails race across a garden. Just there are better there are better ways to spend your day, unless you really like snails. Um, Goldman Sachs. These are temp lines. Um, just excuse me, all time highs. So let me give you these temp lines: 296, 291.45, 288s, 285s, 281s. Did not bring my water to the office. That's awesome. But let me finish up. 274s, 270s. Earnings are coming up. Be careful, right? The earnings for this are the 19th. My expectation is this is such a steep climb. I would expect a little bit of pullback consolidation, but we'll see what happens here. I'm just really going to watch, because over the next 10 days, there will be an administration change. And so there can be news that can really impact the financials. And that's prior to earnings, right? And so, and actually, no, that's wow, that's earnings is the day before. Wow. So we have to, I'm going to be watching. I will play the earnings reaction, because usually this thing will move in that direction for the day. And even if it gives you a pullback, you'll get plenty of plays and plenty of range on it, on that movement during the day. But I'll be watching this. This is a nice run here. Can this continue into earnings? Yes, it can. Could we sell? Yes, it can. Watch these levels, see how it reacts, play it intraday, be careful. And also keep an eye on the dollar. There's just a lot going on right now. But love Goldman Sachs, love how it moves. Usually you can use tech as a contra indicator. Like if tech is rising, Goldman Sachs goes down. If Goldman Sachs is rising, tech may be pulling back. Just on an intraday quick plays, and just entries you watch for the setups on that. Not going to go deep into that right now, but there are some correlations between tech and financials. SPY, just ripping nonstop, right? Um, all-time highs everywhere, right? Just ripping. And this climb is steep. Be careful. It might pull back. And usually when you see a structure that's very steep on the rise, the decline can be quick. So be careful on this, right? I'm not saying we're going to pull back, but for example, what people usually do is when they like something and it's breaking in a direction, that they can load up just to play that rise. And what I'm saying is you may be able to find a better price. So let's see how this shakes out. If it continues to rise, do not fight the trend, follow the trend, but also don't be a puppet, and don't let the trend make you think that it's never going to stop going up. Just like you never think that it will never stop going down, right? So just be careful here. Some of these temp lines: 379, 85, 378.41, 374.10, 373.08, 372.44, 369.81, 367.94, 364.50, 362.18. Temp lines. We'll see how this plays out. For me, I will be looking for retracements here. I will utilize pivots to play this, but for me, I am sticking to the tickers that are usually right now not at all-time highs, just because I have so many plays that are much safer, right? And look at this rise here, how we're riding trend and then just drop, right? And so if you've got I'm not, for those that use automatic stops, or if you're using manual stops, sometimes this will freak you out. Then they just bought it right back up. Look at that drop. Then just bought it right back up, right? So look around at the tickers that make up the S&P and look at the ones, look at where they are, look at how many tickers, have been pulling and moving this market. It's just look around, right? See what's low. There may be room to go higher. This looks steep, but that doesn't mean that we're going to sell off, right? So just be careful on assuming that you know where the market is going and assuming that you know market sentiment. Wait and look for your structures. We're headed into earnings season. Um, and just be careful. If you like this video, please don't hesitate to tap the like button. And if you'd like to receive more videos like these, or like this, I should say, please subscribe to our channel, Power of Pivots, on YouTube, where you can look forward to receiving not just videos from me, but videos from Elisa as she shows you how she utilizes her Power of Pivots script and different setups to get pre-market, RTH or intraday, depending which one you call it, post-market, and swing plays. She finds great setups, and she has a crazy way of playing options that are amazingly profitable. I do love it. And just you're not risking that much, right? Have a wonderful week of trading. Pray for our country, and that we can just really get back to being on one accord and working together, right? And just trade safe, be careful, and as I'll say it again, have a wonderful week of trading. Thank you for your time.